Hello, my friends, and welcome on our next webinar. Today's webinar is about Ichimoku. Ichimoku may be scary at the very beginning, and I totally understand this. Like, look at this, what is happening here on the chart. Um, how do you know what line is doing what? What does it mean? Why you have those different colors here and what's going on, right? But Ichimoku, I don't use it on a daily basis. I was flirting with Ichimoku because I was writing coding robots, trading robots, and I was trying to code Ichimoku, but the results were not promising. So I stopped doing it. I focused on things that they were working, not that they don't. It doesn't mean that Ichimoku does not work. I also have limited programming knowledge, so I cannot program everything what could be programmed from Ichimoku. But this thing which I wanted to program didn't work well. Although Ichimoku is all-in-one trading indicator, it's a trend and momentum indicator, and as it is all-in-one, you cannot just limit it to one crossing, one signal, because that's the whole idea about Ichimoku. Ichimoku can be translated to one look, which means that you put Ichimoku on the chart, and with one glimpse, you see what is going on in the market and if you should buy or sell. That was the idea of developing Ichimoku. It was developed by a Japanese newspaper writer. It combines various techniques together in order to get this idea about the direction and about the sentiment with one glimpse of an eye. So it means one look. With one look, you see at Ichimoku, and you can say what's going to happen. Again, maybe you look at the chart right now, and what the hell is happening here? Why we have all those lines? But don't worry, I will explain you everything. In order to do this, I will show you this. You will be able to see everything. So Ichimoku has 5 different lines. Okay, and there's by default, you have a red line, which is Tenkan-sen. Sorry for my Japanese. You have blue line, which is Kijun-sen. You have lime green line, which is Chikuspan, and you have a cloud. So this is a cloud which is limited by 2 lines, by Senkuspan A and Senkuspan B. Up Kumo, Senkuspan A, and down Kumo, Senkuspan B. Kumo is a cloud in this case. Let me tell you what are those lines. It may be boring, maybe not, but do you need to know this? Maybe you need to know what are those lines in order to fully understand Ichimoku. So let's start with Tenkan-sen. You can see this line, and first look, you can think that Tenkan-sen is kind of a moving average. It's kind of a fast moving average. Okay, so it is calculated by adding the highest high and the highest low over the past 9 periods, and then dividing the results by 2. So 9 periods divided by 2. This is important. Then you have Kijun-sen line, which is a blue line, which you can see is like a medium moving average, kind of. Moves weirdly, like in Tenkan-sen, you can see it moves kind of like a moving average. But in Kijun-sen, you can see periods when it's absolutely flat. It's characteristic for Kijun-sen. Here is flat, here is flat, here is flat, here is flat. It's very often in line with Kumo, with cloud. Look, here is flat and Kumo is flat. One side here is flat, and here cloud is also flat. So Kijun-sen, you can call it a baseline, is calculated by adding the highest high and the lowest low over the past 26 periods and dividing, the results by 2. So it makes sense. Now you have 9 periods here, you have 26 periods here on the blue line, and that's why it can be called like a fast moving average, and this is a slow moving average. Then you have Senku span A and Senku span B, which is up Kumo and down Kumo. Senku span A up Kumo is calculated by adding the Tenkan-sen and the Kijun-sen, dividing the results by 2, and then plotting the results 26 periods ahead. And Senku span B, of course, I'm reading this. There is no reason to remember all this. Senku span B is calculated by adding the highest high and the lowest low over the past 52 periods, dividing it by 2, and then plotting the results 26 periods ahead. 26 periods ahead. You can see that cloud is already drawn and the price is here. And by the way, normally I use like a candlestick price, but if there was a candlestick price, candlestick chart here, that would be too much. Line chart, you would lose the price, the actual price, too many lines. So bars are the safest way, I would say. I mean, I would use it with candles anyway because I love candles. But the thing is that that in order to explain, maybe the bars are the best. So those are cloud, Kumo, but you also have this Chiku span, which is a green color, and Chiku span or lagging span is the current period closing price plotted 26 bucks on the chart. So if you would look at this is actually the price right now, but moved to the left, and moved to the left 26 periods. Like cloud is moved up front, the Chiku span is moved to the back. Yes. I will tell you 2 main ways how traders trade the Ichimoku. First one, let's start with cloud. Cloud is considered as a support and a resistance. So if the price is above the cloud and approaches the cloud from the top, cloud is considered as a support, and traders assume that that price will bounce from this support. If the price approaches the Kumo, the cloud from the bottom, we can assume that it will be a resistance. Okay, this is how Kumo works. Actually, let's do like this, that I will now leave only, I will make Kumo more visible. Yes. And we will have, let's go with candles. So you can see that the Kumo is left and the candles are in. And this is absolutely random chart. I didn't set it to show you that it works or not. Maybe let's go to D1. Why not? And let's see. Let's move to the back and let's see if Kumo works as a support. Maybe let's start from here. We go up. Kumo here works as a support. few months. December, January, starts with December, January, works as support. Then after the breakout, works as a resistance, kind of, not really. This works as a resistance, not really, broken. This works as a support, not really, broken. This works as a resistance, not really, broken. This works as a support, yes, for some time, yes. I would say that not only based on this example, but in general, using Kumo here, I mean in general, is problematic. It does not give signals as often as you would like. Maybe let's go with Australian dollar to American dollar. Also on a daily chart. Price is above Kumo. Price approaches Kumo. Does it work as a support? Not really. Price is below. Approaches Kumo. Does it work as a resistance? Not really. Kumo works as a support. Beautiful. Kumo works here. Works as a support. Here works as a support. Does it work as a resistance? Not really. Breakout. Does it work as a resistance? Yes. Does it work as a resistance here? Does it work as a support? Just for 2 days. Does it work, Kumo? Not really. Another example. Canadian dollar, Japanese yen, maybe different time frame. Let's go for H1. Breakout. Does it work as a resistance? Not really. Does it work as a resistance? Not really. Does it work as a support? Not really. Does it work as a resistance? Not really. Not really. Works as a resistance. Beautiful. Does it work as a support? Not really. Broken. Does it work as a support? Not really. Broken. Does it work as a resistance? Yes. Yes. Let's say yes. Then the breakout. Does it work as a resistance? Not really. You judge yourself. Maybe I will not make any recommendations about this. You judge yourself if it works. Really, I didn't plan to show you Canadian dollar to Japanese yen on hourly chart. Just randomly picked some instruments at different time frames. Now, another way how one can trade Kumo, and it's actually the one that is the most tempting for myself, is Tenkan-sen and Kijun-sen. And then you simply treat it as crossing of moving averages. If you trade crossings of moving averages, it would be really nice to use trending instruments. Okay, so because crossing of moving averages in a sideways trend, they give really bad trading signals. You end with a loss, and then a loss, and then a loss again. If you want to use moving averages, crossing of moving averages, as I told you in our previous webinar on Tuesday, you would prefer to pick really trending instruments. Like this has a chance to really profit from this, because in general, Canadian dollar, I mean the Japanese yen is really a trending instrument. Should we stick with this instrument or pick another one? Let's pick another one. Let's pick this one. How do you trade those lines? So Kijun-sen and Tenkan-sen. When the fast one crosses, when Tenkan-sen crosses Kijun-sen from top, that's a sell signal. When it crosses Kijun-sen from the bottom, that's a buy signal. Let's see. You sell here. Yes, because here is the crossing. and we are here. You buy here, profit. You buy here, you sell here, profit. You sell here and buy here again, that's a loss. You buy here and sell here. I see they are going together. Here it's hard to say if there is a crossing or not. That's problematic. So let's say sell here. So you are buying here and selling here. That's a loss. You sell here and buy here. That's small profit. You buy here and sell here. That's a big loss. I don't have to check loss, loss, loss. You buy here, you sell here, profit. And you sell here and you buy here, profit. You buy here, you sell here, loss. Loss, 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 loss. I don't have to check it because it's a sideways trend. So loss, 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 loss. And then buy, because again, Tenkan Sen goes below the Kijun Sen and goes higher, and then drops here. That's a big buy. That's a sell, profit. Here is buy and sell, loss. But here is sell again. Sell again. And you rebuy here, profit. You can see that it's really promising. But the thing with this is that you need to have trending markets. You use moving averages in trending markets. This can be problematic as you see those times, for example, here, when there is when it's lower or higher, when there is actually a signal. Sell here, yes, 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 it's good. Of course, you can have data window, and then you can check what was the Kijun Sen and Tenkan Sen, and you have all the data. Which one is lower or higher? The thing is that, again, Ichimoku, one look. You open random chart, and by the way, insert indicators, trend, Ichimoku. And you do this. I should change the template to my favorite one. You put this one look, and what's going on? With one look, there is a sell signal from here, but we are above Kumo. I would say it's buy. Most probably soon we will get a buy signal here. Of course, as with moving averages, the signal is delayed, but we are above Kumo. We came back from below, so that was sell, false sell. We are back. I would say it's a buy. Another one, New Zealand dollar to Japanese yen. One look, that's buy. We are above Kumo, and we have a buy signal from Kijun Sen and Tenkan Sen. So Tenkan Sen is above Kijun Sen. Fast one is above the slow one, and we are above Kumo. That's buy. One look, buy. Euro to Polish zloty. Buy as well. Kijun Sen above Tenkan Sen. Tenkan Sen above Kijun Sen. We are above the cloud. That's a buy. That's how the creator of Ichimoku would like to see it. American dollar to Swiss franc. We are below the cloud, below the Kumo. Kijun-sen, Tenkan-sen is below Kijun-sen, and we have a sell signal. Below the support, that's a sell. Although as a price action enthusiast, I wouldn't sell here right now because we are above the support. We see a bounce from this, maybe that's a wide support. So I wouldn't, but of course, like you have different methods. Let's check DAX. Insert indicators, trend, Ichimoku. One look, we are above the Kumo, a buy signal from Kijun-sen and Tenkan-sen. That's a buy. On DAX, it's a buy from Ichimoku. So again, my friends, you may be thinking if you know Ichimoku perfectly and you use this, that I just scratched the surface here. And yes, I did. I scratched the surface here because Ichimoku is all-in-one indicator where you have a lot of functions. But of course, most probably you are starting your trading journey, so there is no reason for me to show advanced stuff, especially with such a complicated indicator. I mean, it's not so complicated, but it's more complicated than the others. Probably when you saw it for the first time, I was like, what is that? So there is no reason to go to advanced stuff, like basics is enough. And especially if those basics make sense. If you combine those crossings here with the price being above Kumo or below, it starts to make sense and it can really look promising. So what I would advise you to is to play with Ichimoku. Also read some books, articles about Ichimoku to extend your knowledge. It's definitely a very interesting tool, and I'm sure you will enjoy this if you will continue working on Ichimoku. It can be a nice journey. It can be maybe your only tool that you will use in the future. Who knows? Thank you very much for attending this webinar, and I wish you all the best in your trading.